Okay, good evening, everybody. And let's just give people a little bit of time to switch over to this live broadcast. Right now, we are streaming on YouTube. So this is just my little introduction. And we have the guys here from Sygnus on. I see few people are already joining us, 10 people online. Hi, Leon. Leon Price is our first person to join us. So really grateful to have you guys coming over. I saw over 100 people at one point joining us on the live stream just now on YouTube. So if everybody can just hop on over here right now, that'd be pretty awesome. I know you guys have a lot of questions. I've been collecting your questions from all over social media throughout the day, over the weekend, via email. You guys have been DMing me, WhatsApp, Twitter, IG, been all over the place. So I've been, collating all of those questions, and we're going to be asking them to the team from Sygnus in just a few minutes. So I'm just waiting for a few more people to join us, and then we're going to get started. So in the meantime, you can just, don't worry why I look frozen. I'm just trying to get everything together. Hi, Philip. Hey, Naomi. Hi. Regina Crossdale says greetings. K Natural One says, hey, peeps. Leon says sometime you have to first on the train. Don't make it leave you. That's absolutely true, Leon. You have to be the first one. Do not want to get left. And this is an IPO that's really interesting. I see many of you who are on here right now were also watching the premiere just now, and you guys had a lot of interesting questions. Did you like the first look that we gave you of Sygnus's new property? The One Belmont Road property that's ground has been broken for. Pretty cool, huh? The artist did a great job on that rendition. Okay, so I see some of the questions already streaming in. So let's just get right into it. First, let me introduce our panel. We have David Cummings. Actually, let me just let you guys introduce yourselves. So David, you first, just give us a brief introduction.
Hi, good evening to all you viewers. I'm David Cummings, the Vice President and Head of Real Estate and Project Finance at the Sygnus Group.
All right, Jason, you next.
Chief Investment Officer at Sygnus.
Okay, and Ike, you weren't able to join us on the pre-recorded interview just now, so I'm glad to have you on the live. Ike, tell us who you are, what you do.
Happy to be here. My name is Ike Johnson, and I'm the Executive Vice President and Chief Operating Officer at Sygnus.
All right, so Philip says, yes, One Belmont look hot. Jamila Johnston says Belmont is fire. So people are taking note of what's going on. I'm going to start with a question that I got actually on WhatsApp. So this question came in from Mark Gale. You might be familiar with that name. And he wanted to know all about, I have my own questions too, but really I got what 30 minutes just now to ask a whole bunch of questions. So this is all about you. But if you want to give me a chance, I can talk about this all day too. All right. So Mark wants to know, what's the compensation relationship between Sygnus Real Estate Finance and Sygnus Capital Group? I.e., when does SCG get compensated and by how much, etc.? Is it going to be identical to the SCI and Sygnus Capital Group compensation relationship? So who wants to take that one?
Well, I'll attempt to answer it. So Sygnus Capital Group itself doesn't get compensated. It is Sygnus Capital Limited that actually gets a management fee of 2%, which is in the prospectus, and a performance fee of 20% of the difference between whatever the return on equity is. So let's say the return on equity is 15%. That return on equity less a hurdle rate of 6.5%, and at the hurdle rate of 6.5%, the company needs to achieve that every year. So once the hurdle rate is exceeded, the investment manager, Sygnus Capital Limited, gets paid the performance fee, and it gets paid a management fee that is paid effectively on a monthly basis. So SCG itself doesn't get direct compensation, obviously, because SCG is the parent of Sygnus Capital. Then indirectly, it gets the benefit at the end.
Okay, cool. Let's move right along because there are quite a few questions here. This one came from the premiere just now on YouTube. So a couple people asking about the share price, so the IPO price. Akeem says, I'm a bit cautious about buying since the last one isn't performing. Am I wrong? I guess he's referring to SCI, Cygnus Credit Investments. I'm not sure. I'm not sure what he means by not performing either. And then Shireen says, that's my hesitance in investing too. Their IPO is currently trading below IPO price. I think she means APO price actually. But so who wants to address the concerns about the price?
Well, I'll jump on that one as well. So, what I have two main comments. The first one is, SCI has delivered everything it promised shareholders in terms of the fundamentals and the performance. So the only other thing I will say about the price, during the APO, we told investors that the objective of SCI is to generate $8 million US in total investment income in under 2 years, and to have a portfolio of 100 million US in under 2 years. So the 9-month results of that company is a record 2.2 million in net profit. So yes, the share price might be down now, but it's very small volumes that are trading. So what I would say to that is, if I open my gate every morning and I see the wind blowing $100 US past my gate, what I'm gonna do every single morning is, take it up and put it in my pocket. I'm not gonna wonder why is there $100 US blowing past my gate every morning. So that's the first part of the response. Enough said about that. Second thing is on SRF. SRF is a completely different animal. SRF is a capital gains machine, and based on how the shares are priced, you are effectively getting a significant discount on real estate assets that if you had the money to buy them, these are the assets that you would actually buy. So I think SCI serves its purpose and it has delivered on its performance. And as I said before, if you see free money, always take advantage of it. And on the SRF front, is a total different animal in terms of being focused a lot on capital gains, and therefore, I think that is a fantastic deal based on the prices that we have priced it at.
Yeah, I think you guys can mention to that. So there are two ways that you make money from investing on the stock market. There's capital appreciation, so that's where the price comes in, when you are able to buy at a particular price, and then when you're ready to sell, the share price has gone up so that you can make a profit. But then the other way that you make money by investing on the stock market is by dividends. And I think, Jason, you could mention here that Sygnus has been a very good dividend paying company. What are the intentions for dividend payments under SRF?
So SRF intends to pay out up to 85% of its net profits, starting 1 year after being listed on the stock exchange. So it's a good point to make about dividends for SCI, but I didn't want people to just think of SCI only as a dividend play. As I said during the APO presentation, I was very, very strident on this point. If you see free money, take advantage of the free money. So, in other words, if my time horizon is 2 years to invest, right? The APO was just January. So if your time horizon is 2 years, it doesn't matter what the stock price is doing now. What matters is when you are ready to sell it, where is the stock price then? And that's my, how I want to say, that's my, I don't want to use the word warning. That's my comment to say to investors, if you are investing in equities, the important thing to look at is there value being created? And certainly since IPO, SCI has shown significant and substantial value creation. So let that be what you use to judge whether or not you buy more of the asset when it's cheap. Yeah.
All right, cool. Well, here's another one that came out of the premiere. You spoke about timelines just now, Jason, but I want to hear from either David or Ike because you guys have been quiet so far. So Shireen, no, not Shireen, Earl was asking, what is the projected timeline for profit by the company?
Well, I think I can. That one is an easy one. The first year SRF has been in operation generated approximately 600 million. Is it, Jason?
Four, 414.
Sorry, yeah, 414 million Jamaican dollars in profit. And for the 6 months following the first year, generated a profit of almost $1 billion. So from the onset, SRF is a profitable entity, as Jason would have outlined, and it's also in the prospectus. The share price is pretty much a discount to the book value. And if you examine the assets that comprise the portfolio in SRF, it's really a very strategic set of properties that have been acquired by the entity. The one Belmont, that should be a very value creating project for us. The Spanish Penwood. So we have very great assets within our portfolio, and we expect the velocity of profitability to continue. That is our expectation.
Okay, good answer. Good answer. So pretty much you're already profitable. No worries there. At least not yet. All right. So here's another question. This one comes from Craig De Leon Diedrich. You can see it there on the screen. You mentioned the Spanish Town property. Craig wants to know, what are your plans for the Spanish Town Road property? Spanish Town Road, not Spanish Town.
I think David.
Sure,
Yes.
certainly. Thanks for the question, Craig. So you may have seen in the media within the last few weeks, we actually had a groundbreaking ceremony where we broke ground for a new 32,000 square foot facility being built to suit for IMCO Jamaica, who are the dealers for Caterpillar. That particular property is an interesting study in how Sygnus Real Estate unlocks value, because we started with a blank sheet of paper and we went from finding the property, purchasing it, putting together a team to design the property for Caterpillar and IMCO Jamaica. We took the designs all the way through the regulatory approvals, KCSC and so on. We procured a contractor. So we put together a complete project from cradle to grave. And we will be delivering that property to IMCO roughly 12 months from now. Now that construction is actually underway. And you will also see from our prospectus that typically we don't stay in an investment for more than a 3 to 5 year horizon. So that, of course, means that we will be packaging this as an investment in due course once we have gone through the execution phase of the project, which is taking place over the next 12 months. So our intention really for the Spanish Town Road property is built to suit for a specific entity, one of the best known brands in the world, Caterpillar, and that will be delivered in about 12 months. And it just gives you an idea as to the breadth of capabilities that we have here at Sygnus Real Estate Finance.
All right, so big things happening there with the Spanish Town Road property. We had a great look at the Belmont Road property. We also talked about the Miami Bay property, and you guys have some other ones under your portfolio. But let's move on first to a question from Leah Price. Not so much a question, but a comment. These real estate building developments need to be innovative and more technology deployed, like what's being planned for Belmont Road, no-touch technology. So what's the level of innovation that you guys will be using at some of your other properties, not just Belmont?
So that's a very good question. And I think the main thing for us is we take the time to research and analyze what the market is looking for. We look not just what is in Jamaica, but we look on a global basis. What is the international best practice? What are some of the things that people would like to be designed into a building rather than being have it retrofitted? It's no straightforward template that we apply to projects. So no two projects that we do or involve in will be the same. and it really means spending the time to research and analyze what technologies are available and what is the best way to incorporate them into the design brief that we give to the architects. I mean, I'll give you another example of what something else we've done with technology for One Belmont is that you would have seen the night image of the building where there's some light strips around it. They're actually LED strips. And I think what that gives us the capability to do with that particular building is adjust the color of the LED to meet the national mood. What I mean by that, so for Independence Day and Emancipation Day, the LED strips can all be national colors, black, green, and gold. For Breast Cancer Month, the LEDs can all be pink. And so you get the idea about how we can use the LEDs in that building to match the national mood or to signify some particular event or occurrence, whether in Jamaica or even on the international scene, to show some sort of solidarity. But the bottom line is that the technology really, it's a matter of understanding the type of development, understanding the technology available, understanding how to incorporate the cost into the financial model to ensure that we are able to obviously make the returns for our investors and for our shareholders.
I look forward to seeing some more of those cool artistic renditions. Who wanted to jump in there? Was that Ike?
Yes. No. Well, we're now living in, living through a pandemic, and this is something that we have to take into consideration when we're doing our buildings going forward, because you need to have situation where there's less touch surface once entering the building. So this is incorporated in our design. Elevators, touch-free elevators, touch-free doors. So once someone visits the building or a worker is entering the building, I think their first touch point would have been when they probably get to their desk. So it's sort of future proofing our building, such that in the future, if there should be another pandemic, at least the building would have incorporated that protection.
All right, I see some more comments coming in. Craig De Leon Diedrich has quite an esoteric question here. How will SRF play a role in Jamaica's Vision 2030? A good question, though.
Sure. So I think one of the goals of Vision 2030 speaks to, how to improve our living standards towards first world, and the role that we play in that. A very good example of that role is the way SRF enable the Caterpillar the development of Spanish Town Road, because that being the brand that supplies critical equipment for the mining industry, for the construction sector, and for the agriculture sector. So those are critical engines of growth for Jamaica. So by SRF making that investment to find the land, do the design, and build the building to enable Caterpillar to have this world-class facility here in Kingston, is how we are playing our role to ensure that Jamaica can be on an economic path to robust growth. That path, one of the goals speaks to having tools of productivity at world-class levels. And so that specific goal, and when you break down in that particular chapter of the Vision 2030, you will see several bullet points that we have used and incorporated in our strategy so that we can drive the velocity of economic growth within the region. And we're driving that velocity by unlocking capital. All the idle lands that you see around Jamaica, that we are trying to partner with people to unlock the value, to create the value, whether it is through proprietary investments or through strategic partnerships. That is how Sygnus Realistic Finance is playing our role to enable Jamaica to meet the goals under Vision 2030.
Yeah, so I see 104 people joining us right now. That's great. So lots of interest in this IPO, guys. A lot of people, and I see the comments really streaming in now as well. So let's get to some more of them. Where do we go? All right, Cruz. Let's add this one from Cruz McFarlane. He says, is the focus only on commercial real estate, or is SRF also looking at residential real estate?
So that's an excellent question. When you look at the prospectus, you will see that Sygnus Real Estate Finance actually is active in all market segments. So commercial with One Belmont project, we're doing industrial with the Spanish Song Road project, that is for Imca Caterpillar. We're doing residential, which we have several on the way. The Ocean's Edge in Discovery Bay, which is a real estate investment note. Surreal Sugar Mill in Montego, another real estate investment note. Norbrook Wausau in Norbrook in Kingston, another real estate investment note. And we're also doing hospitality with Armada Bay Property. So the focus really on Sygnus Real Estate is on all market segments. And what we are doing in all segments is really looking for those opportunities to unlock value, obviously to the benefit of our investors and our shareholders, with of course, downside protection so that we can create the value and also ensure that we retain it.
Yeah, and so for those of the viewers who are just joining the live and perhaps started watching the premiere late and didn't really get what the real estate investment note is, can one of you explain what that is and how that works? That's one of the ways that SRF makes money.
Okay. So a real estate investment note is very simple. What it is a debt instrument. So effectively, SRF will look at, David mentioned Norbrook Wausau and Ocean's Edge. So those projects, those persons were doing their developments and they needed financing. And we looked at the project and designed the financing specifically to meet their needs. So in some instances, a real estate investment note might be, for want of a better term, let's use the term bonds, because everybody is kind of familiar with bonds. It's like a bond that has a low coupon, and then it would also have a share of profit, and that would be a preference share type of real estate investment note. You might have another different type of real estate investment note, which might just be like a typical bond. So all it has is a coupon. You might have another form that is what you call mezzanine debt, which effectively takes shares in a company that is doing a development. And so whatever profit the development makes, we will get a share of that along with a small coupon. So there are many different fixed income or customized debt instruments that we structure and design specifically to fund a particular real estate transaction to meet the specific need of that project and generate handsome returns for shareholders. So that's what a real estate investment note is in its simplest form.
And I really rate how you guys have been very innovative in coming up with different financing structures and different ways that you are pursuing the real estate portfolio. It's not just the traditional build a building and rent it out. You have many different ways that you can turn a profit, and a very good one from real estate. So let's go back to our viewers. Cruz again has another follow-up question. How do you see e-commerce, work from home, and technology impacting the demand for commercial and city real estate? It's a very interesting question. I think there are different elements to that question because, with work from home, we have seen some businesses, especially the smaller ones, saying, well, we no longer need the same level of office space that we used to need. So, and some people are projecting that might be permanent. So how do you see that impacting the future of the commercial real estate space?
Sure, that's an excellent question, and it's one that clearly you can rest assured we have spent quite a bit of time trying to understand exactly what the trend is and where is the world going. I think let me start from a global perspective, in that a lot of the companies are finding that you can't necessarily enhance your corporate culture or innovation by having everybody working from home. There is a certain, we are social animals by nature, and a lot of innovation takes place when people are able to interact, exchange ideas, bounce ideas, in the lunchroom or around the water cooler and so on. So there's a lot of that companies globally were finding they were losing, and there have been many studies that we have looked at, by Harvard, by the economists. Quite a lot of the renowned institutions have been studying the phenomenon of work from home and its impact on productivity, its impact on innovation. And I think the trend has been quite a number of the large players are going back to the office, not necessarily everybody or not necessarily every function, but that they see that there is a role for that face-to-face need to have certain functions performed in the office. It's the same for Zoom. There is so much you can do on a Zoom meeting, but at some point when you're trying to strike a deal, particularly large, complex deals, there needs to be a face-to-face. There needs to be a point where you can look in someone's eyes and come to an understanding, that human contact, that human touch, to be able to strike a major deal. Now let's narrow it down a bit more to our particular region and in Jamaica in particular. So is work from home here to stay? Yes, it probably is. But the numbers of persons who are going to work from home on a long-term basis, I think that jury is still out on that exact number, but we are pretty confident that there will always be a space for commercial. So some functions that are not customer facing can work from home, but I think a lot of the customer facing, a lot of the certain parts of a business, you're going to need that commercial office space. A lot of the multinationals, a lot of the technology and so on. There is always from our studies and analysis, there is always going to be a need for some amount of commercial real estate. So the numbers, I don't think anybody can accurately predict what the ratio is going to be, 40-60, 30-70. Time will tell and will answer that for us. But I think what we're confident about in our One Bill and other investments is that there is a place for commercial real estate, and certainly once there is a place for it, we are here as Sygnus Real Estate Finance to ensure that we can put or give the market such an offering.
I think you make a good point, David. There definitely is a place for commercial real estate, and not just that. There is a culture, a work culture that is established when people have a communal space that they're able to work from. And note, last year in the middle of the pandemic, I did an interview with QuickPlate and Edufocal. Both companies had gone officeless. I decided to do the work from home thing. And since then, Edufocal has gone back to the office. So they tried that experiment, and then they realized a lot of their employees were utilizing their offer to use co-working space. So they weren't necessarily working from home anyway. So they ended up going right back to an office space. And as the economy grows, I think there will continue to be demand for commercial real estate. All right. So Leon Price says, in the prospectus, I think I see 5 properties that are planned or in process of purchasing. Any more updates on those, or did I get it wrong?
Right, David.
So, very good question. I mean, clearly, we are being very, very strategic in the particular properties that we are investing in. I think the prospectus gives as much information as we can give out at this point in time. Many of the projects that we have in the pipeline are subject to NDAs. Many of them are subject to ongoing financial modeling and research, and many of them we may walk away from. So the properties that we are looking to purchase and so on in the future, obviously with the passage of time, we will make our shareholders and investors and our owners aware of what those are. But I think, you should use the prospectus as the guide to what we have pretty much confirmed and cemented as far as the plans are concerned. So I think really use the prospectus as the guide, because it's quite clear how we have laid out those properties in the prospectus, and reading beyond that, really and truly, that will unfold in time.
Okay, so we asked earlier about technology, the use of technology in your various buildings. Stanford Graham has a follow-up question specifically on smart technology and energy. What additional smart technology is being employed to reduce energy consumption and reduce the carbon footprint of the properties?
Another excellent question. So one of the things that we do at Sygnus Real Estate Finance is, and you would have heard Jason mention it, is strategic partnerships. And I mean, we look to partner with the best players in the industry, not just in Jamaica, but we have quite a few partners who are overseas as well. And in forming those partnerships, we look to see how much innovation and they can bring to the table. So to get more specific with this question, our MEP, that's a mechanical engineering and plumbing consultants on, let's say, the One Belmont project, HTG engineering consultants, they're extremely good. And in terms of the technology that's been used for the air conditioning system, we have been very specific to ensure that we're using technologies that are efficient, not just from an energy standpoint, but also from a carbon footprint standpoint. We are very particular about how we are able to deliver a building that will have a low overall cost of operation, longevity, sustainability, and ensure that the drain that it will have on maintenance requirements from the tenants, of course, is pretty much optimized, kept at the lowest possible level. You won't always have the benefit of putting all the technologies, because you have to do the sums and the cost benefit in terms of how much technology you can put into a building that will actually make sense. We have to. Solar has its own metrics. The same for the type of air conditioning system, whether it's a VRF and so on. You have to understand the space. What volume of air are you trying to cool? What sort of power requirements will the building have? What is the load? What is the life cycle of the building? In other words, is the building used 24/7, or is the building only used from 8 until 5? What type of businesses are in the building? If it's a BPO that's going to be used in the building on a 24-hour on a shift system, that's a different energy analysis from a building that's going to be used for corporates from 8 to 5. So, but the bottom line is that we sit and we examine each project and every building and every to see what technologies can we incorporate to make that as efficient as possible. And we have the best consultants and engineers on our various project teams to help us to achieve just that.
That was a really great question, because a lot of people now are asking what is going to be the environmental footprint of whatever it is that they're seeking to invest in. And we see where the JSC itself is going green. They've launched their green bond project. And so there's a lot of focus on the environmental impact of businesses, of Jamaican businesses. So Sanjay Koch wants to know, what are you doing from an ESG perspective in the business operations of SRF in those developments?
Sorry, ESG perspective. Sorry, can you?
Okay, so I thought that was some technical term that was gone above my head that I don't know what it means. I figure what you guys would know what it meant.
Environmental, social, and governance.
Oh, okay. All right, so we covered environmental just now, at least partly. Social, we talked about that in the development goals, Vision 2030. So I guess governance, that leaves the governance part of the question.
I'm going to interpret the question here, meaning a governance of our SRF developments, and that actually is a very good question, and it's one of the hallmarks of how we will be managing SRF, and by extension, how we will be managing your investment, but preserving the value of shareholders. Now, governance for us in the projects is something that we take seriously. From the fund was formed, we have a very detailed and robust real estate investment policy. That policy governs all of what we do at Sygnus Real Estate Finance. And that policy includes a very robust set of steps that we must go through for each and every project. And rest assured, we actually reject or walk away from quite a few projects when they fail to meet the criteria laid out in that investment policy. Furthermore, the policy speaks to each investment having to go through 2 committees for scrutiny before we can begin to undertake an investment in it. The first of those committees is what we call the Real Estate Investment Advisory Committee, which comprises 2 of Jamaica's foremost developers and project managers in the form of Jeremy Brown and Peter Rousseau, along with our president and CEO. Our president and CEO.
Yeah, you're still on, David. Go ahead.
Oh, sorry. Yeah. So our president and CEO, Maris Gray, also our chief operating officer Ike is all the committee as well as one of our chief investment bankers, Greg Samuels, and that committee literally sits and tears every project apart to make sure that it meets certain criteria. Is it going to meet the hurdle rate? Are there any problems to do with the title? Are there any problems to do with the survey? Are the projections for the cost to build it, are they realistic? That committee really spends a long time and rolls up our sleeves, and we ensure that the project itself is viable and it's likely that's something we can deliver whilst meeting the hurdle rate that is expected of us by the shareholders and also our investors. The second committee, once a project makes it past that committee, and not all do, it then goes forward to what we call the Investment and Risk Management Committee, which again, it comprises 3 persons, of which Jason, our Chief Investment Officer, sits on that committee, as well as two very, very experienced investment bankers, Milton Brady. Some of you may know Milton Brady from FCIB, formerly at FCIB, and also Simon Caudry. Milton, Simon, and Jason really look on the investment and the risks associated with the investment. And again, extremely robust, extremely detailed, and they take the project apart to ensure that every risk associated with it is understood. And if we're unable to mitigate a risk that they identified, then that is a project that we simply walk away from. So the governance, before we can spend $1 of investors' money in any project, we have to ensure that we are compliant with the investment policy of Sygnus Real Estate Finance, and having complied with the very stringent criteria within the policy, it has to go through 2 committees, which include independent external members. And I said no investment at Sygnus Real Estate will be made unless all of those steps in the policy are achieved, and both committees give their stamp of approval before a single dollar can be invested in it. So I hope that gives you some level of confidence and understanding about the governance mechanism at Sygnus Real Estate Finance.
Just a quick,
Yeah, governance, super important. Go ahead, Jason.
Yeah, so just to add something very quickly. So in addition to what David just said, one of the things that we are going to be looking to do, maybe, over the next 18, 24 months or thereabout, is to develop certain ESG metrics and actually, publish them along with our financial results on an annual basis in the annual report. So this is something that we look at. Of course, the company is very young, not even 2 years old yet, and ESG is very new. And even internationally, a lot of the metrics that are used to say whether or not a company is really delivering on ESG metrics is still a work in progress. So that's something that we'll take a look at, and you'll see that on a go-forward basis, perhaps in our annual reports.
Sorry, can I add something else on the
Sure.
on the
But
S?
just let me say, okay, so ESG is very new, so I don't feel too bad then that I didn't know
It's
it.
very new.
So I think we all knew about the E and the S and the G, but just as an acronym together as a term, I think that's what I was querying. But I just wanted to say something about the social side of it, and our approach at Sygnus Real Estate Finance, because we looked at a project, in particular, a very lucrative project that we were going to be doing, and the project was going to impact a particular community. I won't say here on air the name of the community, but we went through great expense and lengths to have a community meeting. So the entire citizens association came to a meeting that we hosted within the community, and we had a presentation that we gave them, showed them all the renderings of the project, told them how we would be mitigating the impact of the project on on their community, and we were very open and transparent, and showed them what we were intending to do. However, the feedback from the Citizens Association was not favorable. And so, to cut a long story short, we walked away from the project because certainly, our reputation goes way beyond any potential profit or any potential gain that was there to be made, because we are not going to go up against citizens in this instance here. We walked away, and I think even the citizens themselves did recognize and say to us that they're happy that we were transparent, because they believe other developers may have just gone ahead and started the development without this sort of consultation. So I say that to explain that the social aspect of development we take seriously, and because our name, the three eyes of the Sygnus group itself, innovation, independence, and integrity, mean a lot to us. And so it's not going to be profit at any cost. So we're going to be socially responsible and ensure that the investors and shareholders of Sygnus Real Estate Finance, once they're listed, of course, and of course those who are part of the private placement, will always be proud of what we do and the way we do things at Sygnus Real Estate Finance.
That's a great point. Absolutely. You always want to make sure that, so not only you have the environmental part, those concerns addressed, but the social impact. And especially
Sure.
when it comes to real estate, there is going to be a social impact on the communities nearby. So Naomi Garrick has a really great question. Thanks for this question, Naomi. She says, let me ask Khalila's traditional question. What's in it for me? More specifically, as an existing SCI shareholder. Ike, I'm going to throw that one to you because you've been a little bit quiet this evening.
Yes, so thank you for the question, Naomi. What's in it for you? Um, we've gone through and outlined what we think is a great value proposition for Sygnus Real Estate Finance. And if you're an investor and you're interested in investing in real estate, and you want to all the sub asset classes within real estate, you want to benefit from capital gains in real estate, you want to earn income from real estate, then there's no better investment than Sygnus Real Estate Finance. And as a existing SCI shareholder, which we appreciate, you'll be offered, you're categorized as a strategic investor, and you will get a discount to the market price for the IPO. So you'll get added benefit in that you get the shares at a lower price, and you'll be able to earn a greater return on your investment.
Awesome. Here's another really great question. So you've talked a lot about commercial real estate, residential. You have some in tourism as well. Well, Craig wants to know, are there any thoughts on going into agricultural real estate, utilizing idle lands and unlocking value, as you've put it?
So that's an excellent question. The, the simple answer is we are going to be scouring not just Jamaica and the Caribbean for as many opportunities as we see that we're able to unlock value. So there is no development, and so it could be whether it is a green field, a brown field, or an opportunistic or distressed project. There's no, we don't have a limit or an area of real estate that we're not going to venture into. Really, we will look at every investment. We will do the analysis. We will understand the numbers. We'll understand the risks. Most importantly, what are the risks involved in it? And if we see that we can unlock value and have appropriate sort of downside protection for or get the risk-adjusted returns for our investors, that is a project that we will be interested in, and we will take a look at it. So, we firmly believe in the fact that there is an opportunity waiting to be unlocked on most of the real estate that is around. So if there is a real estate project in agriculture that's out there and somebody wants us to take a look at it, then that's exactly what we're here for. And let us look to see how we can partner with somebody to unlock the value from that particular project.
Yeah, this unlocking, you guys have coined a specific term there with this unlocking of value. So innovation again, the real estate investment note, the unlocking. All right, let's see. We have a bunch of questions coming in, and we're gonna go for about maybe 10 or 15 minutes more, depending on what type of questions remain. I'm gonna try to get to as many of them as possible within the time. Let me take this one from Mark. Mark wants to know, how does SRF see the middle and lower end of the residential real estate market? Are there opportunities you see there? Low being 5 to 15 million, middle being 15 to 35 million. Plans for that end of the market? That's a great question, because a lot of the listed companies we see now seem to be going after the higher end of the market. So middle and low.
Want me to take it, Ike, or?
Yeah, you can start, David, and I'll
Sure,
chip in at the
sure.
end.
So an excellent question, Mark. I don't think that we start out with a project to say we want to target a project in a particular price range. We don't see that as the best way to unlock the value for a particular project. Now, how we see the market, the lower end of the market, I believe, based on the data coming out of the NHT and the Mortgage Bank and the Bank of Jamaica, shows that there is significant demand for housing in the lower end of the price range. And at the rate that those are being built, I believe it's going to be a very long time before that demand can be satisfied. And the NHT is developing some excellent programs, the guaranteed purchase program and so on, to incentivize developers to create those products. And we have some very good players in the market who are doing just that. And that needs to be expanded. Have we looked at some in the lower end of the spectrum? Yes, we have. But clearly, as I indicated, when we go through our particular steps, once we see certain risks, we're going to do what we need to do to protect our investors, and our shareholders. But there is opportunity at the lower end of the market, and there are some very, very good players in the marketplace who are providing that, and there needs to be more in the middle part of the range. That is significant. There has been some talk about whether there is a potential oversupply in that side of the market. I think the fact that there are 64 developments started this year alone should help to answer or partially answer that. The demand is there, and we take a look at on a case-by-case basis rather than making a decision. We want to build something in a particular price range because so that end of the market really does need some attention, particularly those two low brackets that you've outlined. They do need a lot more solutions. But I suspect that coupled with some of the risks involved, some of the margins involved, and you really need to have a fairly large project in order to make some of these here a success. And you need to have the right partners, you need to have the right formula, you need to have the right solution. And I think the best way to have some of those risks actually mitigated is by working with the NHD on the GPP, which I think is an excellent program, and I think that is a good template for success moving forward. Will Sygnus Real Estate Finance go into those areas? The short answer is we are looking at every opportunity that comes to us, and when that opportunity we believe will material or will translate into what we're looking for in terms of for our shareholders and investors, then that is an opportunity that we will take.
So that's a maybe, but it's possible. You're open to the possibility.
Absolutely.
All right. Ashley wants to know, says, could you tell us why SRF purchased the French embassy? Well, that's the former French embassy.
You again, David.
Well,
right.
yes, David, go ahead.
Okay, sure, certainly. An excellent question. The short answer: 3.2 acres in Kingston 6. That really, essentially, we were given an opportunity to bid. It was actually a bidding process, and we won the bid. But when you take a look at the opportunity to get 3.2 acres to buy in Kingston 6, I think that was an excellent decision that we did. We did the analysis, we crunched the numbers, and that is an opportunity that comes along once in a lifetime. And the Hillcrest Avenue, that property has 3 exits. It has an exit on Hillcrest, it has an exit on Lilford Avenue, has an exit on Hope Road. So it really and truly, it presented us with an opportunity to get our hands on a very, very lucrative property in a very, very desirable area of Kingston 6. And I'll start the way I started. 3.2 acres in Kingston 6.
Enough said.
Trust me, that you think enough said indeed, but she does have a follow-up question. She says she wants to know your intentions for the property. So is it that you're going to be renovating the building? Is it that you want to use it? Do you know yet what the plans are for that property?
So as you'll see in the prospectus, it is one of our investment properties, which means that we are still in the process of finalizing exactly how we will unlock the value, and that's a process that you will understand. We play these things sort of by the book. In other words, we are in dialogue with NEPA to confirm and understand what NEPA will actually authorize us to build there, where we already have a development manager and a project manager on board with us, helping us to look at the numbers and the sums and the possibilities. But we have not made a decision as yet, because as described in the prospectus, it is an investment property, which means that we're still in the process to confirm how we're going to optimize the value that we plan to unlock here. So you will hear in due course exactly what we will be rolling out here. So it really is a marquee property, and we are going to be delivering a marquee project here. With respect to the the existing building, that's the chancery that was there beforehand. It is a wonderful building. It was built by Jamaican architects and very well designed building, and we plan to keep that particular building. How we'll incorporate it in the overall development, you will see that in due course. But we do not intend to demolish the building that's there now. It's a lovely building.
Okay, I'm actually quite happy to hear that it would be maintained in whatever your plans are for the future. All right, so I think this next question gives either Jason or Ike a chance to speak now. God Inspired says, with regards to the devaluation of the Jamaican dollar, how has this affected the capital being raised by Sygnus in terms of budgeting for the different projects?
Ike, you want to take it? Or you want me to take it?
Yes, I think you can tell him from an economic perspective.
Yeah. So I mean, the currency devaluation hasn't really affected us per se. As you know, all the properties are denominated in USD, but they don't flow through the income statement with FX gains or losses. In terms of our budgeting, you'll notice that we have strategically acquired properties where we have been able to unlock a large value upfront in terms of the difference between the acquisition price and the valuation on the property. So that gives us, some lead time to actually plan and assess and determine, what the budget for these projects will be. As David would have outlined, it's a very rigorous process where we leave nothing onto chance. So the short answer is, dollar will move up and down. That's part of doing business if you have investments in Jamaica. But the value creation path that we are on, fluctuations in the currency won't, materially affect our plans. Obviously, some of the projects are denominated in, some of the expenses are in J, other expenses are in USD. We use fixed price contracts. In terms of contractors that we utilize, and David can give you a lot of information on that. So the short answer to the question, so far the two-way volatility hasn't really impacted us, as you would have seen from the financial statements that we have produced thus far.
Okay. So Adriel has a question. It says, previously, Jason pointed out that SRF is not to be considered a REIT. In simple terms, can you explain the real value proposition in real estate financing since ownership isn't your principal aim? I missed that one. I didn't hear when you said it, because I would have thought of this company as a REIT, even though there are no REITs in legal terms in Jamaica or in the pure terms.
That's an exceptional question, right? I'm happy that you brought it up because a lot of people probably have the same question. So, SRF is not interested in buying finished real estate and holding onto it to generate income, which is primarily what REITs internationally do, right? And SRF is not a specialist development company, so we're not buying land simply to do developments. What SRF is doing with its capital is we raise capital from shareholders, such as those who we hope are online now. And we take that capital and apply the 3I's principle to it to make the capital very flexible. So the innovation that we utilize in terms of creating real estate investment notes, which gives us income. So those debt instruments, that's one of the primary means to which we get income versus holding on to go and buying an asset simply to get lease income. That being said, we also get income because if we do a development, let's say One Belmont or whatever other project, and that project is sold out, we may determine, because we have an average investment horizon of 3 to 5 years, we may determine that, hey, this project is so good, we should not exit this project in 24 months after it's completed. What we should do is hold on to a small piece of it and exit it maybe in year 4, because we have a 3 to 5 year time horizon. Because in year 4, what would have happened? We would have earned some lease income, even though that is not our core. We would have earned some lease income, but we would have been able to sell that asset at a higher appreciation value. So that's how we get income, right? And then obviously the other side of the strategy is our property acquisitions, our property investments, our joint venture partnerships, and our development projects. Those are primarily equity investments that we are doing. So when you combine the real estate investment notes and you combine those equity positions in the properties that we acquire and the value that we unlock in the joint ventures that we do to unlock value with our partners, and in the developments that we are going to do to unlock value in real estate, when you combine those two things together, that is how we are unlocking value. And this value creation really is not just a phrase that we develop. So let me give you an example. So a normal real estate company would have gone and bought the Miami Bay land using its cash, right? SRF had started out with $2 billion in share capital, but we bought a piece of investment property for 24 million US, and I didn't stutter, 24 million US dollars. So, that's greater than the entire share capital of the company. And Dr. Ike uses creative genius and structured that transaction in such a way that tremendous value has been unlocked for shareholders. How? First, he used his negotiating skill to get the vendor of the property to actually provide us with a $10 million US dollar mortgage. So think about somebody selling their pretty beachfront property, giving you a loan for $10 million to help purchase it. Second thing that he did would have been to convince the same vendor who give us $10 million loan to say, by the way, I want to give you $2 million worth of shares in SRF as part of the purchase consideration. So the person lend us $10 million and then they go and take $2 million worth of shares. Clearly, the only way they're going to take $2 million worth of shares, which is a share swap, right? Basically, we get land and we give them shares. So that's why you call it a share swap, which is an innovative way to actually help finance the project, because we didn't have 24 million US sitting on to acquire the property. And of course, it also use what you call a promissory note, another debt, a customized debt instrument as part of the financing. So, and then of course, SRF cash. So those 4 things combined, that's how we were able to finance the actual acquisition. And obviously, going out deliberately to acquire such a high value property is very different from saying, what I'm going to do with this, I'm going to build something on it. Because by doing that, we have unlocked substantial upside in the difference between the purchase price and the valuation, and again, in what was done with the land. So many people buy land and just start develop. We unlock value because David and his team then went and did all kind of negotiation, and to have beach enhancement work, to have drainage work, to put in 24-hour security, put a wall above the thing, above the land, and also to go and get pre-approvals to put anything there. Hotel can be put there, villas can be put there, condos can be put there, restaurants. So that whole process and ingenuity that we use to structure the acquisition, to structure the actual investment, to conceptualize what you're gonna do there, to put the best project team together, for example, on One Belmont or on Spanish Peninsula, all of those skill sets combined is how we are unlocking value, which is different from a company that is simply going to do development. When you're doing development, you don't have those skill set to negotiate financing. That negotiation of financing is a specialized skill set. That negotiation and structuring of the investment to create real estate investment note is a specialized skill set. So what we are saying is that our platform have this specialized skill set to do very complex and innovative financing solutions, not only for our own projects, but for other person's projects, which unlocks value. Because if you have a beautiful piece of land and you have some money, but you don't have enough money for the bank to give you the bank financing to combine with your capital to then do what you want to do, then no value is being created, right? So that's the difference between us and, say, a REIT. Very innovative, and we think that this strategy and focus of ours, similar to how what we did on the private credit side will actually stimulate growth in the Jamaican economy and other Caribbean economies. Because if you take last point, Spanish Penwood isn't only about the fact that we spent $2.3 million to buy the land, and then we are spending $550 million in the entire development. After we have completed that transaction, the operation that's going to remain on the ground is going to positively impact that community with the jobs that are being created, etc. So again, value is being unlocked because we are not just focused on building high-rise buildings. We are focused on investing across the various asset classes that the economies across the Caribbean need to create growth and positively impact the communities. We spoke about ESG and basically unlock value for you, the shareholders who own those assets and the company.
Yeah, big up yourself, Ike. Ike is sitting there. You met Jason sing your praises. The creative genius he called you.
Yeah, man, he is.
All right, so we've been
It's a
going.
teamwork.
Yeah, it really is a unique mix of skills that you guys have there with your team at Sygnus Group. So we've been going for over an hour already. Can you believe it? And there's still more questions to go. I'm going to squeeze in 2 more questions, and I'll try to get questions from people who haven't asked yet. So Stanford Graham, I don't think I've taken any from him before. He says, based on your detailed financial model, how will the company pivot if there is a sustained lower demand than expected for the properties? What would your approach be?
Well, you want to go ahead, Ike?
Yes, that's quite an interesting question. And with any business, there are risk because no one really has a crystal ball and can tell what actually happens in the future. But a big part of our investment philosophy is that we must be able to see 2 or 3 exits before we take a decision to make an investment. So, for example, if we enter into a project and the economy say tanks, then this is something we would have anticipated when we're putting together our investment memo. And instead of selling off the properties at the end, we may decide to lease the building, or there may be a next strategic investor, maybe another REIT would be interested to purchase these buildings. So, once we're going through our investment process, there's a lot of deliberation to the fact that, if something goes wrong, what do you do? And for our investment and risk management committee to approve a transaction, we have to convince them sufficiently that we can exit a transaction should things not go as planned.
So to add to what I just said, right? Another unique feature of SRF and the innovation. So we don't, and David, we tell you this, we don't do any investment hoping to make money on it. So what do I mean by that? We actually have what you call 3 anchor investors. So when SRF went and raised money in the private placement, the design of the private placement considered having what you call anchor investors. So, and these are pension funds who put up a large ticket. And these pension funds, effectively, agreement with them in return for them putting up a large ticket in the private placement is that they get an early look at anything that we are doing. So what does that mean? It means that pension funds have an appetite for holding underlying real estate. And our design metric, as you would have seen in Spanish Penwood, because I don't remember if David mentioned it, that we had a 10-year lease signed with Spanish Penwood in USD, renewable for a further 10 years, months before ground was broken. So that philosophy is what we take to pretty much all of the assets that we are doing. So if we are executing something, in addition to what I could have just said, we would have had partners, both people who more than likely would want to occupy or lease the building, in terms of advanced discussion, and people who want to actually buy that building or buy floors or interest in the floors with that lease tenant from early out. So that's how we kind of strategize to mitigate again. So we are not going to buy a piece of land and then economic downturn come and it catch us by surprise. Of course, we don't have a crystal ball, but we have enough mitigants in place, and more importantly, we are diversified, because when you have an economic downturn, if some segments of residential get hit, as you are seeing in this crisis, what will happen is, for example, industrial get a boom, because during the crisis when everybody have to get locked inside and so forth, you need more logistics and more supplies, because you need to actually facilitate people deliveries to people in their home. So that's the reason why we focus on all the asset classes in real estate, because there's never been a time where every single segment of real estate get hit in an economic downturn. So that's one other way in which we mitigate risk.
True. All right, we're down to our last question. Sorry for those of you whose questions I didn't get to, but I think most of them were covered. So some of you had questions that other people had asked before, and I tried to give different people a chance to ask a question. So I'll take this last one from Fitzroy, and he's asking, since additional debt will be taken on to fund deals in the pipeline, is there a debt to equity threshold that SRF will try to maintain or stay below?
So, I mean, SRF has a target of, we can use 2.5 times debt to equity in terms of leverage ratios. That's our goal. Of course, in terms of debt metrics, swinging back to the SCI front, we are very, very laser focused on operating companies that are very lowly levered. And so when you have a crisis and you are lowly levered, you don't have much to worry about, right? Because you don't have a lot of debt to pay out relative to the assets that you have that you could sell. So that's our general philosophy. Obviously, we also take guideline and instruction from the Investment and Risk Management Committee, and of course the Enterprise and Risk Management Committee of the board, if circumstances should change. And of course, we'll always communicate this well in advance to shareholders. So we're not going to run a highly levered entity with like 10 or 9 times debt to equity. It will be very manageable and be very specific and deliberate in terms of taking on debt for transactions that are unlocking value for shareholders and at the same time providing downside protection. That's our motto and philosophy. We say it 100 times every day, and we really mean it.
Good stuff. Well, thank you so much for joining me, everybody. Thank you to Jason, David, Ike, and to all the people who joined us live. I saw 160 people on with us at one point. So, and people were just maintained interest. Questions kept flowing, so I didn't have to really jump in at any point because you guys are keeping the Sygnus team on their toes. And I feel like if I would allow it, the people online would go on all night, but I need to go to my bed. You see, it's late. So the IPO is now open, and you can invest through Sagicor eInvest. That's the main platform that's being used, but there are also a number of selling agents. Who are the selling agents? Remind us.
So we have JMB as broker as well. We have Scotia Investments. Selling agents, we have Barita, JMB, I think
Proven.
Mayberry.
But in general, if wherever you have your brokerage account, you can contact your broker, and I'm sure they'll be more than happy to help you, with the process to subscribe.
Good stuff. Thank you again. So thanks once again to everybody who joined us on the live, to everybody who participated in organizing this event, to all our guests, and to those of you who are going to be watching this after the fact. You didn't get to ask a question live, but I'm sure you still are interested in this IPO. You just heard how you can get involved, how you can purchase shares in the Sygnus Real Estate Finance IPO. Thanks again, everybody. Until next time.
Thank you, Khalila.
Thank you.
Thank you. Take care.
Okay.